Can you tell our viewers a little about the Cymor Strategic Growth Funds?
Yes, Cymor Strategic Growth Funds, which we refer to as CymorFund, started in 1980. It consists of three pools of capital, the latest being established around 2005. And we have primarily invested in small caps, in resources, in tech stocks. And we've done quite well over the years.
So what has your track record been?
So our track record has been rather stellar over this time. Of course, this current year in Canada, where we have a large number of our picks, has not been favorable. So we've given up quite a lot of what we would have considered our normal gains. But in spite of that, we're still in double digits and around the mid-range of double digits for the year. So we're quite proud of that achievement.
What is your outlook for the US and Canadian equity markets during the next 12 months?
Unlike many others, and we've been publishing this in our blog at CymorFund for some time now, we strongly believe in the U.S. market. If you look at the U.S. equity indexes, or generally any of the indexes over the last year, what you'll find is that most achieved a 20 or a 30% rise in value. We believe that the stock market is foretelling what the U.S. economy is going to do. We believe we're on the verge of another massive rise in values in the States. We look at the record number of cars being sold. We look at the record number of housing starts. Last month was a record, and many other factors. We're keenly aware that the middle class has been decimated to some extent in the U.S. and that a new class of minimum wage workers has been established. But in spite of this, the U.S. remains the economic engine of the world, and we strongly believe that if you simply bought the indexes in the U.S., which we don't, by the way, we buy individual stocks, but if you bought the indexes in the U.S., you would do very well this coming year. On the other hand, your question included our view of Canada, and we're not so optimistic about Canada. Canada is resource-driven and financial-driven to a large extent. We believe the Canadian dollar is somewhat overvalued vis-a-vis the US dollar. We believe the manufacturing sector is being hollowed out, and we believe the overabundance of gas and oil being found in the US and being made available throughout the rest of the world does not bode well for Canada. We therefore do not believe that the Canadian indexes will show the same type of gain as the US. And in Canada, we look to have clean energy, but more than that, financial and tech stocks as the emphasis for us.
Can you describe the criteria you use when deciding whether or not to buy a particular stock?
Many people use a predefined list of criteria, and they go down that criteria list as if it's a checklist. We strongly object to doing that. We start off with looking at the sector. And if the sector is a rising sector, it's a plus. If it's a falling sector, then the stock has to be really exceptional. Secondly, we look at whether they have something unique, whether they have a particular niche or a corner of the market or a potential. Thirdly, we look at management. Management has to be experienced. Management has to know the industry. Management has to know how to run a public company. Next, we look at the cash and the capital available. Is the company properly financed? Has it the ability to raise enough funding to be able to carry out its objectives? And lastly, we look at the technicals. We are a strong believer in charting and technicals. And if the technicals and the charts show that this is a positive potential future, then it stays on the list. We will not go against the technicals. We will not go against the trend. The odds are against you if you do that.
We noticed that you like Tenbaggers. Are there any stocks out there at this time with that kind of potential?
Well, it's very interesting. In Canada, we've had a meltdown of the junior market, and most of the junior stocks, whether they are good, bad, or indifferent, find it very difficult to raise funding. As a consequence, right now, the number of potential Tenbaggers are greater than at most times in history. But we not only look for Tenbaggers, we look for stocks with value. So, for example, we'll suggest a stock like Carfinco, which is at the lower end of the subprime market. They finance cars. We think there's, with their dividend and their potential increase in value, we think that's got tremendous upside. On the other hand, we always have our eyes open for Tenbaggers, and I can give you a couple of Tenbaggers right now. One that we like very much is a company that used to be called Phone Time and changed its name recently to Tellza. Tellza, we bought at 4 cents. We have a significant position there. It's now trading 13 to 15 cents. It's expanding dramatically. It's very profitable. It's buying back its own shares, and we think it's a potential 10-bagger. I would also refer you to something that takes a little more risk, and that is a company called Romarco, which has an enormous gold deposit in the southeastern U.S. They were trading over $2 a few years ago, and they have been hit by delays in their permits and all kinds of other issues. I think most of their issues are now done with, and I think they're about ready to start producing. They will be a low-cost producer. They're trading in the high 30s now, depending where they are. That is most certainly a potential for a 10-bagger. The only caveat that I add to that is that if you do not believe that precious metals will have any value in the future, that's not one for you.
As you know, those higher return stocks carry greater risks. How does Cymor go about offsetting those risks?
Well, the entire method of choice depends on a risk-reward ratio. So you measure the risk against the reward. And as Warren Buffett has said, buy when others are not interested in the stock and sell when everyone is interested in the stock, so long as the value is the same at both levels. And we believe that that's how we choose stocks. We choose stocks when there is high value, when the merits of the stock stand out for themselves, and we do not believe just because the stock is trading at $1 or $10 that it affects risk. People sometimes forget the future is indeterminable, and what we hope or expect will happen may not necessarily happen. Investors should take all necessary precautions, seek their own professional advisors, do their own due diligence, and decide which particular stock and which particular investment is right for them. Each person's risk tolerance and investment tolerance is different, and one should not take advice without looking into one's own perspectives.
Subscribe to our daily newsletter and be the first to get expert insights and advice from our roster of industry specialists. Smallcappower.com, investment ideas and research.